Welcome to the Cube Talk Show. Have you ever thought about the cause and effect of money? On this show, we'll be looking at alternate ways of dealing with money and with finance. I'm your host, Joe Barbieri. We have two guests planned for today. The first guest is Paulina Yip, and she'll be talking about investing in gold. And the second guest, about halfway through the show, will be Alexander Kupish, and he'll be talking about prosperity, dealing with finance, but in more general terms. So we have Paulina here with us now, and if you'd just like to give us some background on yourself.
Sure. My name is Paulina Yip, and it is my pleasure to be present here to offer an opportunity to discuss about investments. Regarding my background, I have been working as a research analyst in the past 11 years, and I mainly focus on like Canadians and also a little bit global equities in the past. So hopefully I can use my background to help people out.
Okay, so in terms of investing in gold, how do you recommend, or what are the ways that people can invest in gold to start with?
I think invest in gold, there's a number of ways. Given right now, a lot of people worry about there will be a bubble in gold pricing. I would say there's numbers of ways to invest in gold, such as like you can invest in stocks, in the gold producers, or the gold explorator, or you can invest in physical gold, such as gold coin, bullions, or you can invest in gold ETFs.
Okay. Is there one that you would personally recommend if it was your own money?
If it is my money, then I will definitely look at gold stocks because, as I said, I used to analyze stocks, so I think this is my strength. So I will use my skills to analyze stocks. But in general, people, if they have to decide what kind of vehicle that they have to use in order to invest in gold, I will like to go into a little bit details, such as, for example, like when you invest in physical gold, you will have the leverage to gold price, but you don't have the leverage. You won't expose to such as car risk, operating risk, that kind of things. It all depends on your risk tolerance or your gut feelings, what kind of vehicle that suits your risk tolerance. If you want to have a little bit upside and you think you have a better understanding of some gold producers, then I think you better to invest in gold producers because it gives you a more upside to, and more leverage to the gold price as well.
Okay, so from what I've read in the past, there's I think 3 levels of producers. There's the major senior ones, there's the mid or smaller ones, and there's the exploration companies that are just looking for the gold but don't actually have it yet.
Yes.
So do you have a strategy to deal with which one of those 3 and when?
I would say
each?
the senior one definitely their balance sheet is stronger. They have the cash in the chest that they can prepare to acquire some potential names in order to offset the depletion in productions. And the medium size, like they are just in the middle of those 3 categories. The junior ones, such as what you say, exploration ones, you will have a kind of upside in terms of discovery potential, but you don't have the upside such as production because they are not ready to produce yet. So you also don't have the reduced exposures to such as cost, risk, operating risk, that kind of things yet.
So if you're the person that doesn't want to research, if you were to get a gold fund or a gold ETF, what are the pros and cons of that, I guess, to start with? Versus buying a single company, say, or say 3 companies?
I would say ETFs is a kind of special exchange traded fund. It have a whole basket, consists of a whole basket of gold names. So from a diversification perspective, it is a good way to get exposures to gold. Because you only have to pay a little bit commissions in order to trade the ETF. There's a slightly difference between trading particulars in a gold stock versus like trading ETF. First of all, as I said, they have a diversification features. Another thing is for the ETF, you have to pay annually expenses. Basically, an ETF is represent a unit of gold holdings. Usually, it's when you invest in the ETF, the capital goes to ETF, and then you will buy physical gold in order to back the ETF. So each unit will represent certain amounts of gold, normally like 1/10 of the ounce of gold. And as I said, each year you have to pay annual fees in order to cover the insurance, carry charges, all this insurance. So eventually the percentage of the gold represented in your certificates will going down, because each year they take a little bit percentage by selling certain amount of gold in order to offset the annual fee. So that is the slightly difference between owning a stock names versus owning an ETF. And also depends on your holding horizons. If you want to get in and get out more easier, and I guess ETF is the best way because you pay lower fee rather than owing like precious metals funds such as mutual funds.
Yeah, so speaking of the mutual funds, I think the fees are probably different than an ETF. Mm-hmm. Is there anything else that's different between them?
I think it's come down to the diversification and also the investment style of the portfolio managers. And as an investor, you definitely have to really dig it out, dig it up and see what kind of investment style that the portfolio manager who in charge of the funds, what kind of name that usually they will go after. So in terms of diversifications, I think ETF provide you a better diversifications than mutual funds. And also, as you say, you pay higher fees relatively to when you compare with the commissions that you pay for owning ETF.
Okay. So we've covered the stocks, the funds. We can go into the physicals now. If you own physical gold, well, I guess it's obviously different because you own gold in your hand, but is that something you'd recommend, and when? Or would you go with the stocks?
That is a kind of concern let me back up a little bit. For example, like right now, you can see a lot of fund going into us. An ETF such as what we call EZKB. It is an ETF which they have the physical gold holding held in Switzerland, and people thinking if work comes to worse and if gold become a kind of commodity restrictions, under kind of restrictions like back in 1933 in the U.S., and that give investor a kind of peace of mind. So relatively to the U.S. Listed ones, which is GLD, and versus their physical gold is held in London. To a certain extent, some investors have a kind of concern about that. So that's why the demand for the Swiss-based one is going up or increased dramatically because of that kind of concerns. So back to the physical ones, if you want to own physical gold, definitely you have to see where they keep their gold. Back to the concern that if worse come to worse, gold becomes restricted as a kind of commodity, and you have to make sure that they held it in a reliable custodian places, such as Switzerland, those kind of places, or Hong Kong. That because I read an article, basically Hong Kong, they built a kind of vault which is at the airport, so it's facilitating exchanging the settlements of golds that give you a kind of comfort that if they have to deliver gold, they have the facility to do that. So this is a kind of factors that you have to bear in mind when you want to invest in physical gold.
So do you think these restrictions may come back?
You never know, right? If you, one of the reasons why you want to invest in physical gold, because you have to pay like carry charges, that kind of things. Definitely you want to make sure that you can access to the gold when you want to. And that is the big issue that you have to bear in mind, because if worse come to worse, something happens, and if you invest in ETF, the exchange may not be able to settle. So, but I'm talking about that is the worst scenarios, right?
So I can get to another type of question now. What drives the price of gold? Assuming you want to buy it in some form, what makes it?
I guess basically there are a few drivers for the gold price movement. And I would say from a macro perspective, you can boil it down into certain categories such as the mine productions, this like basically in two categories, supply and demand. And the demand is coming from mine productions, scrap, grow. And then in the past, like central banks, such as in the developing country, like the central banks, because the legacy of the gold standards or the Bretton Woods agreement, and the European Central Bank have to sell gold in order to set the ceiling price for the gold. But in the last years, and you will see a lot of like emerging market central banks, such as China, especially they buy a lot of gold. That going back to the issues, because people understand the U.S. is trying to reflate the economies, and I can get to that point later. When we're talking about the drivers, such as the central bank roads, whether they're buying or selling gold, also like industrial demands, investment demand, all these are the drivers for the gold price. In the last year or so, I would say you can see evidence showing a lot of increasing demand from investment. Back to the point that I'm saying, when investors concerned about global economy, inflation's perspective, and also like this kind of concern, and also if investors worry about the heightened volatility in the stock market, definitely they want to invest in gold. And these are all the drivers driving the gold price up. And I think giving everybody understand U.S. is printing money like at a crazy pace, that will not going to change. So I would say over at least medium terms, the gold price will keep on rising based on all this kind of concerns. And as I said before, like investor understand the U.S. try to reface the economy, and that will trigger a kind of virtual cycles of credit growth. And maybe I get into a little bit details. For example, like as that start and the capitals will flow out of the U.S. market, flow out of U.S. and then get into emerging markets. And the local emerging markets central bank will have to print money in order to have the money to buy the dollars. And that will trigger a kind of increase in the reserve, foreign exchange reserve. And that would induce a kind of interest in buying gold because they don't want to have their local currency appreciate at a very quick pace. And then the second thing that you will see from this kind of situations is the dramatic increase or growth in the domestic deposits at the domestic bank. That will trigger a kind of growth in the loan growth. And eventually, because the growth in loan, and you will trigger a kind of increase in income and also wealth, and that will be a second round to trigger like the interest in buying gold as well. So all this kind of macro fundamental situations, as I said, will make sure that the gold price will going up rather than going down. But of course, in the short terms, we understand the midterms election in U.S. will happen in next week, and that would trigger the strength in currency of U.S. dollars. And usually, it's like the movement of gold is in the opposite direction to the U.S. dollar. So I would say in short term, you will see the gold price will coming or cool down a bit because of this strength in the U.S. dollar. But I will get back to my points, like in the longer ones, gold price definitely will go up rather than going down.
Yeah, the U.S. dollar was up today. Well, versus Canadian a couple of cents, but I think it was also against most currencies. And the gold was down about $30. So
sometimes you will say, oh, how come gold price coming down if the macro perspective is pointing to that direction? And we have to differentiate like short-term trend and long-term trend. And back to my point of saying gold productions in the past, because of the depletion of the resources, all the lower hanging productions or fruit is already picked, and the demand is right now outstrips the supply. I would say because first of all, because all the gold mining sites in West Africa, Canada, U.S., and also Australia, they are coming to the mature stage, and there's not too many new sites has been commissioned in order to offset the depletion of the resources, and that also another factor or drivers driving the gold price going up.
Yeah, it doesn't look like there'll be many more mines, right?
Yeah.
And if there is a new one, it tends to take years to get it going.
Not only that, before, as I said, the central banks, especially in the developed country, they have to sell gold. But right now, the gold reserve for those, especially the European central bank is already come down to the minimum level. So over time, that force will not have too much impact on the gold price going forward, because like they're not the net sellers anymore.
So you think the central banks will start buying gold again? Is that right? Do you think that will happen?
No, I'm saying that European bank definitely they don't have to sell anymore because they reached the minimum. But on the other hand, the emerging markets such as India, China, because their gold reserve is so low, so they, as we saw, like China coming to the markets, the central bank coming to the market to buy gold like crazy recently. So you will see two different scenes. Like one is from the Europe country, they're selling gold, but they don't have too many golds to sell. On the other hand, like the emerging markets, central banks, they have to buy gold in order to offset like the capitals flowing into their emerging markets, like the point that I mentioned before, when U.S. is going to rephase the economy.
Yeah. Do you agree with the scenario of the developed countries are going to sell their gold to the emerging countries? These are the central banks, I mean, from one bank to the next bank. And, well, whoever wants the gold more, it could either be a net sell or a net buy.
I guess so.
Which I never actually thought of till now, but that seems to be what's happening in terms of what the banks do by themselves, the central banks.
Yeah, I think, as I mentioned before, it's like why the emerging market central bank have to buy gold, because they want to balance out the dollar exposure, because they don't want to have too much dollar exposure in the foreign exchange reserve, that have to force them to buy gold in order to balance it out. And that is the dilemma that they have to face.
Going back in the history about the gold, they had the Bretton Woods Agreement where all the foreign exchange rates were fixed and tied to the price of gold. And then in the 70s, they dismantled that and used the US dollar as their reserve currency. There's talk now that the US dollar is not that good and
Yes.
it's being diluted too much, and they're talking about bringing back gold. Now, what do you think will come from that? They want to bring the gold standard back, or the dollar, they might change it to another reserve currency or something of each?
That is a very hot topic. People is try to find out. But I think giving Europeans, like the Euros, cannot take up that role, obviously, especially when we see a few Europeans economy is coming to the point that they have to print out money in order to pay out their government debt. So that, following a kind of big questions, euro dollar definitely cannot take the road of U.S. currency. So that's why people worry. U.S. is keep on printing money. The value of U.S. dollar is not going to appreciate but depreciate, and the governments have to raise tax in order to get some revenues to offset the interest that they have to pay. So that put us in the very ugly pictures. So that's why the argument saying that gold always treat as a kind of means of restore of value, and that is the scenario people is just paying, and they viewed gold is gold, and no matter what, it is a store of values, and if there is any war break out, people definitely will take gold rather than take any kind of currency. And again, this is the worst scenarios, but people is right now is so fear. When you look at the equity markets, and they're trading at low volumes, but it keep on rising, and then all of a sudden people just decide, oh, the volatility may be too much, and then they take the money off the tables, and that is a kind of fear market. So anything can happen.
Yeah, gold and fear, that's
go hand in hand.
that's something I was relating in the past, that whenever there's a lot of fear, that's when gold really makes its move. Typically currency deflation or currency inflation, and just general system fear that whatever paper system we have is not as effective as before. So I guess, is that what you're seeing now, that say the last 2 years, that's what's been giving gold its extra pop in the price?
Not only that, I guess people worry about this may be another round of Great Depression, right? So people just want to have a peace of mind. If you own stocks, even you may have an increase in the values, but eventually, because U.S. dollar is going to depreciate, and it doesn't make sense. So that's why people want to have something that they invest and make sure that value is going up. This really means going up.
Okay. I'd like to thank you for coming on
it is
the
my
show.
pleasure.
And we're going to be taking a break in a minute. And if anyone has any feedback regarding gold, they can email me at joetheinvestor.today@gmail.com. And if you want to hear anything about this topic, anything related, we can bring it on a future show. So we'll be taking a break now for a few minutes, and Alexander will be up next.
Counter sides to every story, but only two ways the coin can bend. But why are there so many choices, so many ways this all could end? Do I put all of my heart into one thing, or all of my love into you? So what is this all about in the first place? Or how do we know just what to do? Oh, tell me you don't know what to do, and I won't be waiting on a sign, 'cause I've spent more than my share at the end of the line. And I can't worry about where you think you might find me, 'cause I've been waiting for you, waiting for you, right where I'm meant to be. Do you seek or do you hide from all the things you know you are inside? So why are we fighting so hard to survive, when we don't even know
Welcome back to the Cube Talk Show, and we're now going to talk to Alexander Kupish, our second guest. And here he is, Alexander.
Hello.
How are you?
Good, good. Thank you for having me on.
Yeah, you're welcome. If you'd like to start with your background, and you're going to talk about prosperity, is that?
Yeah. So today we're going to be talking about prosperity, or more correctly, inquiring into what prosperity is. Maybe coming to a conclusion that prosperity is more of a feeling and a state that comes from within versus just what is basically around us. And we're going to be using a method that is commonly known as self-inquiry, and also getting into some non-dualistic self-inquiry. My background in this is that I basically started to do self-questioning in 2005, and I'll get into later on in regards to the method I was using. But I used it to overcome such addictions as cigarette smoking and addictions to sugar and these type of things. And later on, I started to use self-inquiry to look at my relationships, not only with substances, but also with one of the things is money, people, and so on.
Okay, so I guess we'll be applying this to money, or well, any way you can acquire things or get where you need to go.
Yeah, today I guess we'll focus especially on finances, on money.
So, as a start, how would you, I guess, describe the method to start with?
Well, the first thing is that it's the whole idea is it's non-dualistic. So you start off with the idea of inquiring into what is prosperity. Okay, so the first thing we have to do is we got to look at the ideas that we have. So for most people, prosperity may be something like having $1 million, or making $200,000 a year, or whatever. Unfortunately, even studies that have been conducted show that many people who make a great deal of money never actually have enough. And those who make more and more and more always seem to want more and more money, more and more status, and all these things that money can buy. So this comes from a socialization, it comes from an idea, and what is actually happening is that through acquiring more and more, the person is fueling maybe their insecurity or their need that is never satisfied. Prosperity, on the other hand, is a feeling. Prosperity is a feeling of basically having enough. And prosperity is a feeling of being able to create more of abundance, not necessarily only in financial dollar terms, but also in, for example, exchange of friendship or energy, or whatever you want to call it, through inquiring into how we relate to money or issues of security. Okay, so the first thing that you basically want to do is you want to let go of the idea that prosperity must look like something. Because if you believe that it must look like something, it means that within that thought, within that structure, and there is a very big attachment to it, there's also an aversion. Okay, so that's the first thing you want to actually inquire into. You want to be open about it with yourself. You want to basically fully be able to embrace the idea without locking into it, without being like, oh my God, what if it doesn't happen? Because under that, oh my God, what if it doesn't happen, is where your fear is buried. Now, whether you actually get that thing that you're after, whatever, it's a house, a car, a perfect job, whatever, an X amount of money, it's not important. What is important is that as long as you have that fear underneath it, you'll never get that thing. And even if you do, subconsciously that fear will always be there. So you'll never have the feeling of prosperity. So
this is the fear of, well, the fear of losing it.
fear of losing it, yeah. And always needing more and more and more. Because fear is like, you know, fear basically stands for false evidence appearing real. And many people have used this, you know, type of to explain fear like this. And no matter how much money you're gonna have, this false evidence will always appear, and it always will be very real. And it will only become more real. It's like the more money you have, it will only become more real because your attachment to it will escalate. And
So the fear goes up
fear goes up.
as it becomes more real.
Yes.
Interesting.
Yeah.
So the attachment aversion part, so just explain that a little bit more. What does that mean?
Well, okay. Attachment is basically whenever you have a goal, usually you're attached to having that goal. So you're attached to, you really want it. So whenever you want something, that's an attachment. Now, whatever you're trying to satisfy with that goal, whatever you don't want to happen. For example, you want a secure, stable job because you don't want poverty or whatever. So what's happening is in your mind, you have set yourself up for a mode of thinking that I'm attached to this goal because this goal will give me security, and I have an aversion to not having that goal. So as long as I don't have it, there's this aversion. Okay, so you have an attachment and an aversion. Unfortunately, what happens is that also sometimes in order for us to get our goals, we have to step out of our safety zone, our boundaries. And that's when the attachment aversion flip over. And the goal actually becomes an aversion because the goal itself is telling you, okay, you're going to have to get out of your safe income bracket, or you're going to have to get out of doing the things that you're used to. So the goal now becomes an aversion, and that the condition which you have right now, which you're resisting, like poverty, becomes an attachment. You want to have poverty because you're afraid of what happens when you become rich. So that's basically how the attachment aversion works. And it as long as the attachments and aversions are not balanced, or you're caught up in this world of basically, you're in the middle and you can't really go anywhere. And it's just, there's always more and more desire to have or not to have. More picking here and there, but you never actually end up going anywhere. Even if you do acquire some property, you end up not being happy.
So these ideas are subconscious ideas, right?
Yeah, a lot of times. So a lot of times people are not aware of these things. They don't, they can easily face things that they want, right? A lot of the time, the person, what happens is they want things because they were socialized to want them. So they will want a job or a condo or these type of, maybe safety or security things, or maybe status things, right? Because it can, it can also become a status thing, but it's their dream might have been something totally different. So if, and that's when you get really into like the misery where your dream is this, but you're living this life, and actually there's if you look at like the archetypal books, it's this is the archetype of the prostitute, a person who sells themselves to get something. Well, they want something totally different, and just it really replenishes your energy and so on.
So let's say now that you have this, you're aware that you have these attachments, you have these aversions. How do you actually clear
Okay.
them out.
So going back into what we begin with is we begin with non-duality. So basically, we have an idea of what would make us happy in regards to finances, okay, or what would make us happy in regards to having the perfect job. So the first thing we got to do is instead of saying yes or no to the universe and always picking and choosing, what we do is we accept things as they come. Okay? So you start off with very simple things like, for example, you look at your bill. So whenever you get your bills, you know, where it be for cable, for the cell phone, or whatever, you always look at your bill and you look at how you react to the bill. Okay? If you always react with anger, if you always see as the company's gouging you, if you always have these type of negative emotion, if it's always, oh my God, I'm not gonna have enough money to pay, or you know, this type of a reaction, then that's your first clue that there is something wrong. Okay? Now our brain, the part that wants to control things, will say, well, I want $1,000 a month more. I want this, I want that. There'll always be a want, because there's an aversion to not having. So the aversion of not having creates an attachment to one thing. And this is when we gotta stop and basically start using non-dualistic self-inquiry, which is, as you hold this bill and you have all these reactions, okay, you simply ask yourself, is this what it's like to feel prosperous? And you stop. And you don't let your mind play with you. Your mind is going to say no. Your mind is going to make all kinds of stories. And you can implement a question, is this truth? You know, is this what it's like to always know that I have $100,000 a year job? You question it instead of making up your mind about it. And then through questioning it, you start to see that these energies, these thought patterns, are not really true. But as you see that they themselves are not true, the illusion of the person who has them also begins to fall apart. And this is non-duality, right? So you know, so basically, it's like I said, you start with the small stuff, like when you get your bills, and you always ask, is this what it's like to be prosperous? You know, and you know, that's one of the main things. The other thing is, how is your relationship in regards to receiving money? How do you behave when you're supposed to get money? If somebody offers you money, you know, when you're out, when you go out for a dinner with friends and you're supposed to, and it's time to pay, how do you guys behave over the bill? You know, so many times people, you know, they start to fight in the restaurant, you know, oh, I'm paying, you're paying type of thing, right? And you got to watch these reactions, because it's this everyday life that is giving you clues about your subconscious mind, how you're relating to the world of prosperity. You know, and you start to see that you'll always complain as long as these behavioral patterns are deeply ingrained in you. You know, so that's the first thing you do. And the easiest way to do that is to basically pick a habit. So, you know, you inquire into, is this prosperity, right? But you facilitate the inquiry by becoming aware of your habits. Body language shows a lot. So for example, you can become more aware for 1 week in regards to how you even just handle money. Or you can make a list of spending habits that are perhaps not friendly towards your savings account, where a lot of money tends to just leak out. You know, you leave your house with $40, you go Starbucks, you go here, you go there, and next thing you know, you don't have any money left, right? if you can pinpoint habits like that that happen often throughout the weeks, at least 3 or 4 times per day, you then can start questioning, is this what it's like to be prosperous at the time when the habit is happening, when you are about to spend that money, or when you have a certain reaction that has become trained. Within a habit, there is thousands of subconscious thoughts. So when you drop a habit, even just maybe overspending on one certain thing for a week, you end up dropping thousands, millions of subconscious thoughts. And also, one of ways that people spend money or overspend money on, for example, is addictions, right? Now, this is where we take money and food and combine it together, but people's usually quest for abundance or quest for a lot of money comes from security, and security, or wanting security, and security is directly linked to food, right? With money we buy food. Well, most of the food that we buy in North America is really not food, it's actually just stimulants. You know, everything has white flour in it, and corn syrup, and sugar, and, you know, all kinds of stimulants. So if you look at the relationship of money to your groceries and what type of food you're buying also, and if you're spending your money on a lot of stimulants, that also shows you other habits. You know, now you get into habits of dropping, you know, maybe you stop drinking coffee for a week. Maybe you quit smoking. And all of a sudden, your relationship with money, again, changes because you dropped a habit. This habit wasn't really financial, but it was taking your money. And you become more and more empowered.
So the money is sort of underlying these habits, and it's underlying the thoughts, because...
Yeah, I mean, money, you know, all these things that we do as human beings is linked to the fear of death, basically, and to wanting to acquire. And that's why when we're in that mode of wanting to acquire, it really only coming from fear. You know, this is why nothing ever happens. This is why so many artists, sometimes, you know, they live in, they're poor, or they're poor for a small time of their life, because they're just basically, you know, not concerned, because they're doing what they love. And this is another thing. A lot of people who do healing work, for example, have this problem. They have problem asking for money or whatever. There's nothing wrong with asking for money. And just because you do what you love doesn't mean that you will live in poverty. But sometimes people, I think, are so busy creating with their heart that, you know, they forgot to charge money, or they're, you know, this happens sometimes with artists, right? All they do is they end up painting and they have barely enough money left for food, right? But I mean, this is when a person is in the flow and when they're creating, it's the prosperity comes from that, from what they're producing, from what flows within, you know, like writers, for example, and so on. You know, they don't. If you're resisting going to work, probably there's not much love going on at your job. If you enjoy what you do, it's a different story.
So resisting is another word for aversion, like...
Yeah.
Yeah.
Yeah, and you know, some of the aversions that we have, some of the biggest aversions that we have when one does inquiry into them, it's you find out that it's actually our greatest attachments. You know, because we don't want to go past that threshold.
So let's say now, just as an example, you're in that restaurant and a bill shows up, and somebody has a reaction like, I want to divide this down to the penny because I want to make sure I pay my share of it.
Okay.
And so that's a reaction, that's a fear
Okay.
of something.
So
what does the person do now?
In order for a person to truly succeed in dropping habits, there are certain things that they have to they should be able to do, and and face. Number one, the first thing is you really want to, you have to have the will to do this. So number one, it's all about you. It's about your will. Okay? The second thing is that willpower is not actually control power. So there is nothing for you to control here. And sometimes life is not going to work out exactly how you want it to. It's going to teach you lessons. And sometimes they hurt. So what we're really not dealing with here is, it's not willpower, it's not control power, it's more like it's belief power. You have to have enough courage and confidence in yourself where you're able to look at your beliefs and understand that real freedom from behavioral patterns doesn't come from doing the things that we traditionally do, which is just gathering more and more finances to mask our aversion not to having money, but actually facing that aversion. You know, and you know, without getting into like past lives and all this stuff, we come here to learn a lesson and to experience life. And you know, sometimes we experience poverty, and if you have a real aversion to it, then the best way to deal with it is to face it head on, because if you don't, eventually your subconscious will create it.
Yeah,
So
that's right.
that's the one thing. Is the first thing is just basically courage, and you know, the second thing is a certain amount of centeredness. So what I mean by this is to start off the day with some kind of meditative exercise. Okay. Now, unfortunately, today we have so many practices, and very often some of the biggest like behavior patterns or addictions that people may get, or opinions, is about spiritual practices. This is the way I meditate. This is right. Everybody else is wrong. I'm doing this. I'm doing that. As long as your mind is getting quieter and quieter, and as long as this is an act of withdrawing yourself from the world, from this illusion, whatever you want to call it, versus it's not an activity where it becomes basically, it creates more and more noise and more opinions, it's good. So it doesn't matter. Do you want to do Tai Chi, do Tai Chi. You want to do yoga. You want to look at the candle for half an hour, do that. It doesn't matter what you do, isometrics. In my book, Holistic Creation, Focus on Qigong, I strongly recommend exercises. There are isometric exercises and some yoga positions like the bridge and so on. And what this does is it centers your mind. So in the morning, you set your intent to inquire into, for example, what is prosperity. And you say, okay, every time I'm going to touch money, every time I'm going to take out my ATM card, whatever, I'm going to watch my body language. I'm going to watch my reactions. And then once you do that, once you became focused, once your mind became focused through, you know, like I said, isometrics or Qigong or breath work and so on, your mind becomes like a missile, becomes very guided. And then all you got to do is throughout the day have the will to notice the habit, being whatever it may be. Okay? If you've noticed that you're going to Starbucks, you know, 3 times a day and you're spending like $20 and you don't want to do that, and you cut that out for 1 week, then what happens is not only have you violated your financial situation, but also it has to do now with caffeine addiction. So these are, you know, you're dropping a lot of things in one shot. And in regards to the method itself, it's you simply observe as the need or as the reaction comes up, and focus on your breath. You can focus on a certain spot in your body, for example, your heart, and you can ask yourself, is this prosperity, or is this what it's like to feel prosperity, or is this, you know, or does this have anything to do with my goal of being healthy? You can also identify if something is a need or a want, and you'll very quickly start to see that actually, for example, what your body needs is just a glass of water and not a cup of coffee. And if you're willing to follow your body and your intuition, you'll start to discover that these various limitations and addictions that we have are not as real as you think they are.
Okay, we have a few minutes left, so do you want to provide a contact information, website, email?
Yeah, my website address is holisticcreation.ca. My email address is holisticcreation@hotmail.com, and the name of my book is Holistic Creation and Focus Zone Qigong. And like I said, it specializes in giving you the exercises. It's more of a workbook, so it's not really a book that you read for entertainment. And then it teaches you how to how to release behavioral patterns, everything from small addictions or small things like, you know, just drinking coffee or smoking, to larger behavioral patterns that have to do with your family, nation of origin, and these type of bigger behavioral patterns.
Okay, well, thanks for coming on. So that's the show for this month. So at the Cube Talk Show, it's Thursdays, the third Tuesday, of each month at 6 p.m. And thanks for watching. Have a good evening.